Namaskar friends. Today about share market. Why did IEX shares crash by 28%? Is market coupling the real reason? A share crashed 28% in a single day, and that too India's biggest electricity market, IEX. You want to know what really happened? In this video, we are going to break down what exactly happened on July 24th when IEX shares took a massive fall. We will understand what market coupling is, how it works, why it's shaking up investors, and how India's power market is about to change. Let us see in this video. If you read the news and still didn't get it, no worries. I'm going to explain this technical stuff like you are hearing it from a friend. So listen closely. What is IEX? IEX stands for Indian Energy Exchange. It is a power exchange, a platform where electricity buyers and sellers meet to trade power. Just like NSE, BSE, those stock exchanges. IEX is a trading platform for electricity. Think of it like a grand power bazaar. IEX is the dominant player. It handles over 90% of electricity tradings in India through exchanges. But on July 24th, 2025, IEX shares hit the lower circuit and fell by 28%. Why? The answer is market coupling. That's a real game changer in this video. CERC, Central Electricity Regulatory Commission, approved a new rule called market coupling to be implemented by January 2026. What is market coupling? Sounds fancy, but let's make it simple and clear. Currently, India has 2-3 major power exchanges: IEX, PXIL, Hindustan Power Exchange. Each exchange runs independently, matches buy-sell bids, and comes up with different prices for electricity. So the market clearing price differs across platforms because there are 2-3 different platforms. But with market coupling, here is what changes. All buy and sell bids from all exchanges will be collected together and matched centrally. So you try to ensure uniformity. This central system will set one single market clearing price for electricity across the board. And every exchange will take turns acting as the market coupling operator, like a round robin rotation. Then why is this a problem for IEX? IEX is the current leader in power trading. With a uniform price, the traders won't have any specific reason to choose IEX over others. IEX loses its monopoly-like edge. That means less trading volume, less revenue, and hence less profit. We have seen the result in the market today. Investors got scared and boom, share price crashed. Here is an analogy. In case you are confused, let us say one simple analogy. Imagine you have been drinking tea every day at a luxury tea shop for ₹30. Suddenly a roadside shop shows up selling the same tea, same quality tea for just ₹10. Now, if every shop sells the same tea at the same price, would you still pay ₹30? That's the fear for IEX. Why would people choose our platform now? It's their concern. Now the big question, does this change affect us? That is the electricity consumers? Not right now exactly, but in the long run, maybe yes. If market coupling becomes efficient, centralized price discovery can lead to more stable and possibly lower electricity tariffs. Big power distributors like Tangent Go in Tamil Nadu currently depend on long-term power purchase agreements (PPAs) that last for 25 years. The government wants to reduce dependency on long-term power purchase agreements and boost short-term real-time trading, which will reflect actual market demand and supply position. That is why market coupling is a stepping stone. But there is more to this. Let's see. In Europe and the US, the market coupling models are already in use, and it is a beneficial thing only. Their markets are more efficient and transparent. But will this actually work in India? Earlier attempts at market reform struggled due to bureaucracy, lack of infrastructure, and of course, our politics. Okay, but who will be the market coupling operator? Well, regulators say all exchanges will get an equal chance. It really depends on technical capability, fairness, and neutrality. IEX argues we have invested so much in building this infrastructure. Now, if the system forces all exchanges to work equally, we lose our edge. Commissions go down, profits, of course, shrink. It's unfair, they say. But monopoly cannot be allowed. There is another major impact: investor confidence. As soon as the news broke on July 24th, IEX stock hit lower circuit and plummeted 28%. Mutual funds and real investors with IEX shares saw huge losses. Many retail investors consider IEX a strong, dividend paying and stable stock. But now, with the new regulations, uncertainty is high. Panic selling followed. Effect is market crash as far as IEX share is concerned. To wrap it up, market coupling is good for transparency and efficiency. The government wants to encourage more short-term power trading instead of long-term contracts. But for IEX, a dominant exchange, this could mean loss of market share and profit. For investors, it is a reality check. Never blindly trust monopoly stocks. That is the moral of the story. For us consumers, this might lead to lower electricity prices in the long run if implemented well. But we will have to wait and see. Okay, let us see the joke. We thought IEX was all about powering the nation, but turns out they just gave investors a power shock. Whether you are paying your electricity bill or buying IEX stock, be ready to feel the current. Namaskar.